Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
India's economic architects, together on one powerful stage, from Nitin Gadkari to Arvind Panagaria and Montek Singh Ahluwalia, visionaries who are shaping India's future, all debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook: finance, roads, reforms, disinvestment. Nothing is off the table. The inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's been another midweek trade where we have seen the bulls struggle in trade today. Of course, we've given up 24,600 mark in trading session today. We also did slip below 24,550, managed to pull up a little bit higher amid all those choppiness and the volatility that we've been seeing for many days and weeks now in trade that continue to dampen the sentiments across the board. What's happening on the Nifty sectoral front? Well, barring the banking space, especially the PSU banks, rest all of the pockets and sectors are actually down in trade. It's the pharma IT names that have actually slipped lower. Both the indices are down by nearly 1.5 to 2% in trade. You also have seen that the broader markets have given up those moves as well. You can see FMCG, consumer durables also trending lower. Autos, metals also losing some sheen, and we are also looking at some oil and gas stocks that are also dragging in trade. On the Nifty, what's in fact bucking the trend in this in the afternoon trade is Asian Paints, 2.2% higher at 2,491. Look at even an HDFC Life, Coal India, BEL, Trent. These are the varied names that are actually hovering higher. When we look at the declining side, you'll see some banks, some pharma, some IT names that are declining in trade. So Wipro, Tech, Mahindra among those losers. You also have IndusInd Bank, Bajaj Finance, Jio Financial among the losers. And from the pharma packet, Sun Pharma, that's also trending lower in trade. In the FNO pack, you have IIFL Finance that's hovering higher. You also have Tube Investments, Union Bank of India and Asian Paints as among those which are the top movers right now. Let's welcome our guest on board. We have with us Mr. Sharad Avasthi. He's the head of research at SMIFS and he's joining in to share with us his views on the markets. Warm welcome to you, Sharadji. Good to have you with us on the program. We have so much to talk about. Let's start off with the global front. The tariff talk that continues to escalate now further. Apart from the 25% tariffs that were slapped on India last week, we are now hearing on an everyday basis Donald Trump really making statements saying that India will have to pay a price for being an ally of Russia or buying oil from Russia. He's talking about steep additional tariffs over the next few hours now, because he's made that statement overnight and within 24 hours we're expecting to see some or the other heightened, tariff announcements or additional tariff announcements that could be made on that front as well. How are you looking at these, uncertainties that are only rising by the day?
Yeah, thank you for having me on the show. I think, uncertainty regarding Trump is something that is a bit unnerving for the markets. We were happier knowing that a 25% tariff is done and dusted. Maybe some negotiations would have up and down on that. But then, Trump being Trump, he can be as unpredictable as anything. I think his VIX would be higher than the Nifty or Bank Nifty VIX. So I think, you can't really judge much about what Trump is going to do. But I still believe these are negotiating tactics, and he has finally found, a soft space within India to just, go around and talk too much about it. And I think the worst part is that we were not expecting him to be this kind of a bully, at least for us. While even US has not really curtailed its exports of various products from Russia, but it still expects India to oblige. So I think they should first look at their own, sourcing arrangements, that they are still buying it things from Russia which they need. And just because India is procuring oil from Russia, you have a problem with India. So it's pressure tactics to increase the defense, etc., while India is not budging down. And I think the economic condition is such, that around 30% of the tariffed goods, they are in no position to substitute it because we have dominant position there, some diamond, some jewelry, some, shrimps, feed, shrimps, etc. And even on the textile front, some things where we dominate. So I don't think the impact will be such huge. So I think he's trying to talk his way through. But I don't see the Indian government budging because we have had past experiences with US allowances which have not been very good. Whether it was Monsanto with respects to the chemical adulteration, or whether there was the Bhopal tragedy. I think there have been many issues where we have had problems with allowing the US a free hand. So I think India will not budge. Maybe we might have to go through some pain. The last adjustment was around 20 basis points on the GDP. I think that much adjustment we see every year because of monsoons either not being there or being too heavy. So I don't think that's a very big problem. And on the consumption side, I think banking and consumption and liquidity on the domestic side is going to be very strong. Sentiment wise, yeah, certainly this is a bit of a problematic time. So maybe we will remain volatile for some time. But as regards that having a very big impact on our macroeconomic or microeconomic situation, I don't think that US is in a position to wield that kind of effect. They're trying to soften it out because they also know that the blow to them will also not be very steep because of trade with India getting a hit back, because it's anyway not very substantial. Even he has spoken about it. So he's just trying to set an example of a famous name, calling stupid, doing stupid things, calling the country's economy is dead, which is the fastest growing economy in the world. So I think, yeah, he's trying to cover up, do a bit of marketing gimmick, more politics than anything else. And I think over the next month or so, I think most of the correction is more or less over. So expect some volatility, 500, 600 point kind of volatility over the next month or so till most of these nuances stabilize. But beyond that, I think we'll resume the uptrend.
Sir, if you could help us understand, do you think the worst of tariff reaction is what we've already seen? Could there be a deeper correction in case there are announcements of a higher tariff? He's talking about 100, 150% kind of tariffs on pharma. Do you think sectorally there could be some deeper cuts if the announcements, continue?
Yeah, if those kind of absurd numbers start coming through, I think sentimentally, obviously, you will see some impact. But yeah, I think if it is not the end of the pain of tariff, I think we are very near to the pain end
Okay.
point. Actually. So I think
Okay.
it's not where we are the lowest point yet, but we are very near to where we could be because of tariffs.
Okay, got that. So that's the tariff news. We'll also try and understand from you what's happening with the, RBI that has taken a decision to pause the rate cut cycle right now, even though they continue to, look at a lower forecast for inflation. GDP forecast has been maintained. The stance has been maintained as well. The RBI governor has reiterated that the Indian economy continues to be robust, and even though the uncertainties are continuing to persist, but they are abating at this point in time on a global footprint as well. Of course, the markets have not had any, news to really react positively on. Most of it was also getting discounted before the RBI policy came through, that the RBI might just go on to hold fire for now. What do you think the Indian markets are actually looking for from the policy front? Because there was also a statement that was made by the RBI governor saying that, now there is a very little room for policy to clearly support growth.
Yeah, I think what is clearly trying to mention is see that unless and until internationally rates collapse on the downside or come down substantially, it is very hard for me to stand to be a standalone player and cut rates. If you look at the difference between US and Indian rates, they're already at all-time near to all-time lows, I believe. So we always believe that this time a rate cut would be very difficult for RBI. The positive side, I think, is that growth, etc. wise, he's still not looking at a lot of problem, and there is some uncertainty with respect to how the US scenario will shape up with tariffs, lower tariffs, without tariffs, and what kind of impact they will have on the domestic economy. So I think it was very difficult for them to take a call and cut interest around this time. Though I think with more clarity, maybe in the next meet, I think by then most probably you will have more clarity with respect to the Fed's transition also. So most probably he will be in a better position to talk about rate cuts when they meet next. And I think the initial rate transmission, liquidity infusion, whatever they could do to bolster the economy, they've already done it. I think private capex is one cog in the wheel that still got to pick up over the next 3 to 6 months as rural and urban consumption both pick up with added liquidity from NBFC relaxations, etc. I think there is high probability that the private side of capex will also get a boost, and I think that should yield the last push to the wheel. So that should lead to much positive developments. I think that is the only piece that's missing, and once that starts to roll around, I think the RBI will also be in a better position to cut rates further. So next MPC onward, most probably we will have rate cuts. This time around, I think it is on expected lines. Even after the last policy when they cut it by 50 basis point, if you looked at the way government securities moved, they were clearly suggesting that maybe it's a time to pause a bit.
Okay. So that's on the RBI front as well. Let me also talk about the third key factor that the markets are continuously keeping a keen eye out on is how the Q1 earnings are panning out. So far, do you think, has it been a hit or a miss? And how has India Inc. really fared in Q1? Largely, what have been your key takeaways, sir?
See, largely the Q1 is basically a subdued quarter because we all know BFSI is a major portion of the total
Yes.
indexes mostly, and banks usually put in very subdued performance in Q1. That's the seasonality impact. So I think beyond Q2 we will see much more improvement. As far as the Q1 numbers are, I think they are more or less steady with other income boost. They look much better. But if you remove some of the larger companies' other income, I think the profitability growth is very negligible. But Q1 anyways is very slow, so I don't think it will have a very large impact on your full year projection downgrades right now. On balance, I think last week some numbers have come out that have positively surprised us. Though the later part you won't get good numbers. So I think all in all, it should be called a neutral quarter. Not much to give, not much to take from this. But I think the larger picture is that Q2 onwards, most probably most of the larger sectors will have much more clarity. The broader economy will be on a strong footing. The festive season is spread across and is starting early, so that should help. And as we have been talking about some two-wheeler, bookings, etc., are showing some positive development. So rural urban consumption, pay commission approvals, and the tax cuts starting to show up in the economy, and as liquidity also. So I think this quarter not much to take away, but next quarter onwards, I think we will have a lot of action on the quarterly numbers on the positive side.
Got that. Let me just delve a little deeper and probably help our viewers understand from you, your key approach on certain sectors or pockets or some certain stocks that have come out with the earnings thus far. Let's start with IT. I remember discussing this ahead of the numbers that came in. Of course, earnings have again been disappointing, like you pointed out, even in large caps and mid caps this time around. It is a opposite reaction on the stocks front as well from what we had seen in Q4. And you had been constantly talking about how this is not a space that enthuses you at this point in time. Already in the last 1 month, the index has dropped by about 11 odd percent. How would you look at IT now? Do you think it's probably going to be seen as, opportunity to accumulate at lower levels, or do you think the pain is going to continue for far too long and we do not know how soon can the recovery really come in here?
Uh, well, I would say I think the deal wins have been strong. Some headwinds on the AI side, obviously, and the restructuring of the workforce, etc. I think the TCS layoffs are
Yes.
something that is very negatively affecting the broader market.
Yes.
But they also had one of the strongest hiring. If you look at the hiring numbers from most companies, I think TCS had one of the best hiring during the quarter. So I think these things. If you looked at them on a standalone basis, they might look very different. But I think rationalizing the workforce is something that was very important for them. And to sum it up in a simple language, I think what will happen is largely that this quarter we had our tailwinds. Next quarter we should continue with that, and I think the sentiment and the forward-looking statements would be much more clearer when we meet these companies after these quarterly numbers, second quarter numbers. And at these valuations, I think across the board, maybe some of the high price names like the Persistence and Coforge of the world are a bit on the expensive side. But I think the rest of the pack, the frontline names like the TCS, Infosys, Wipro, HCL Tech, they seem like fairly valued at these prices. So I don't think you may means they are not mouth-watering valuations, but there is a possibility, that because of these deal wins and more certainty at the global level, forward revisions would be on the upside for most of these companies in terms of their annual numbers. So I think this could be a good, time to accumulate these stories and build positions in them for the next 1.5 year. I think they could surprise you on the positive side.
Okay, got that. Any suggestion on the FMCG front, sir? How are you looking at that pocket? Most of the earnings that have come in thus far, the commentary definitely points out to some signs of recovery in the urban demand, as most of the players can see. But the space has been a big laggard thus far. Do you see any, sense of picking up these stocks if one has a long-term horizon?
Yeah, certainly. I'm also of the view that urban consumption will pick up even more going ahead. Even rural consumption should contribute, and beyond that, the raw material pressures will not be as problematic as they've been in the past. So that is another benefit for them. And I think most companies are also trying to rework their strategies. The initial influx of the newcomers also created a lot of competition, but these companies are trying to put in place a strategy to challenge all this and take over this adjust to this challenge. And I think going forward, most of them will be able to do it. The only sore point for the likes of Britannia, HUL, Nestle could be, that valuations are already a bit stretched. Most of them would be trading at what I think 50, 60 times forward. Yeah, so Britannia like is 54, 55 times forward. So that leaves very little space. So within that space, I think something like an Imami could be a good idea to bet on. A Dabur could be a good idea to bet on. A Jyoti Labs could be a good idea to bet on. But the frontline names, the like of Tata Consumer, Godrej, Britannia, Nestle, HUL, I think the valuations at which they trade leave very little on the table. So I think if you want to, I certainly think that this space is going to show some improvement over the next 2-3 quarters certainly. But to play that theme, I think ideas like Dabur, Imami, Jyoti Labs, these look like good ideas to play this theme.
Okay, fair point. Let me also ask you, sir, on some of the earnings that are just coming in. I mean, just a few minutes ago, we saw PVR Inox come out with the earnings. Here, the consolidated loss has narrowed to 54 crores. The revenues have seen a jump of 23% over a year-on-year period. And we actually are seeing the revenue from operations reaching to 1470 odd crore rupees. And this is up from 1190 odd crore rupees reported in the same quarter last year as well. Especially strong recovery in some box office collections, record food and beverage spends, and highest first quarter advertising income since the pandemic is what is being reported for PVR Inox. Now, we do know that multiplex players have been going through a very painful period over the last 5 years, and they've been struggling to stay afloat, revamping, redesigning, and reimagining the way their businesses can actually continue to stay afloat in this era of OTT. Would you be confident of PVR Inox as a long-term play, or do you think this is a story that could be constantly hit with newer innovations?
See, newer innovations is something you can't really comment too much in
Yeah,
advance. In an age,
yeah.
things change very fast, and the new generation is also very fast at switching and adopting to new trends. But what I think is, that this OTT charm that happened over the next day, primarily post-COVID era, I think it's speaking out, and the type of changes that have happened with respect to how entertainment comes down to OTT. There is a lot of challenge now. You don't have those new releases coming down there. There are specific releases which are OTT specific that are coming out. So I think the movie going extravaganza is not something that is going to slow down in a country where urbanization is growing, your per capita income is growing. I'm not expecting people to, look at the cost of tickets and stay back at home. While at the same time, in the short to medium term, I think companies like PVR need some rationalization to understand at what price point, the influx of new customers or even old customers starts to slow down. They need to particularly address that. I think they have not addressed that very well. That is a pain point for them. So premium, etc. Yeah, I understand it's a premium showcasing experience and everything. But for every industry, there is a price point that you can push through the customer. I think that is where PVR needs to work on. But yeah, in terms of what are you do at these prices, what are you expecting in the next 1 year? I think there are some more good releases expected. Maybe the company reports something around 40-45 rupees as earnings. Getting 35, 40 times would not be very difficult. To start with, I think, yeah, 1500, 1600, that is what I'm looking at. And I think it's a very good contra bet to bet on.
Very good contra bet to bet on. All right, we'll definitely chunk this out for our viewers to really see this in isolation as well. Sharadji, tell us, beyond say the banking space that we have discussed, where else are you seeing a profit pool getting created in this market?
Beyond banking, I think autos could be one space you could look at. I think escorts at current prices does look like a decent bet. On the two-wheeler side, we have spoken many times about Hero MotoCorp. I think that's a good
Yes.
story to bet on. Uh, Within tech, I think some of the small ones company is particularly interesting because it's largely domestic oriented. So Orient Tech would be a very good name to bet on. I
Okay.
think the upsides could be very good. The second half of the year should be very good for them. They are working on some government contracts, device as a service, etc. products they are launching. And there's a cloud integration part also. So I think some IT names, even something like a Cyient within IT, could be a very good name to bet on because the valuation comfort is very high there. So once the recovery comes in, I think it would aid substantial gains from here. And in terms of valuations, yeah, I think tire stocks are something we are looking at. They seem like good bets at these valuations. Maybe the front lines don't offer that much, but something like a tire, Apollo tire, they look like good names. And paper stocks, yeah, certainly again, valuation comfort is very high there. So I think
Hmm.
that is one sector where you could make some money over the next one and a half year.
Okay, got that. We'll definitely note all of that down as well. Apart from this, I also wanted to take your view on the primary market space. So much of action today. We've had 3 new listings come in, especially the NSDL IPO. That was the much more, anticipated IPO that's finally made its debut. 7 years after its peer CDSL did. Now, CDSL created about a 900% plus kind of a growth in this last 7-year period for investors, and those who missed that bus were really looking at this opportunity to get into the depository space. And even though NSDL is largely focused on institutional, I wanted to take a view. What is your sense on NSDL post listing, and between CDSL and NSDL, which one would be your top favorite bet?
See, I think NSDL should benefit more out of this, and I believe they have also spoken about focusing on the retail part of it.
Yes.
CDSL might be looking at some competition there also,
Okay.
and so once NSDL tries breaking into that area, there could be a lot of market share loss for CDSL also. And on the institution side, I think that's a larger play, and it will continue to grow. Look at the mutual fund AUMs, the PMSs, AIFs of the world. So I think the institutional side of the business is not going anywhere. Insurance is a very small basket right now, barring LIC. Most of the LI companies, particularly, are very small. Penetration levels in general insurance are expected to go up. So I think the institution side of the business is expected to scale up very fast. Direct, I think, yeah, it will continue to grow, but most probably they will nibble some market share from CDSL there also. Because being a larger entity, earlier they were not focusing on that area at all. Now they are speaking about entering that phase also. So I think comparatively, I would be happier buying into an NSDL. I think the numbers will be much more stable in terms of long-term growth, etc. And the pool size is much bigger. So most probably they will also get some valuation uptick compared to CDSL. And their entry into these smaller clients or the retail client base, basically, that would even perk the numbers up there also. So I think NSDL probably is a better bet compared to CDSL.
Okay, fair point. Apart from NSTL and CDSL, beyond the capital markets, also does any of the other newly listed IPO interest you?
Newly listed, I think Lakshmi India Finance, etc. It corrected a bit after the listing, but we were not that negative. I think it should have done much better.
Okay.
Adit Infotech hasn't really left much on the table. It's already gone up. So I think offhand, what I can remember is maybe this Lakshmi India Finance is a good bet you could look at. That looks like a decent story.
Okay, fair point. All right. Well, Mr. Avasthi, thank you so much for being with us on the program today, and like always, sharing such wonderful insights with our viewers. Good to have you with us as always. We'll see you soon. All right, viewers, we'll start now wrapping up the closing trading action on the markets. Therefore, 75 points of a cut. We managed to pull up from the day's lowest point. 74, 75 points of a cut still remain, in the markets. On the Nifty, 24,573 is the level at which the Nifty is looking at shutting shop. The India VIX levels have risen 2.7% higher. Over 12 levels can be seen, and that's really the reason behind all the choppiness that we've been witnessing through the course of the day. PSU banks, Nifty Bank, Nifty Financial Services, these are the ones that are actually among the top sectors which are, or the only sectors which have managed to close into the green. But beyond that, all the sectors have slipped, led by losses on pharma, losses on IT space, real estate, and even the small cap and mid cap stocks that have dropped quite a bit in trade today. IT index 1.9% lower is among the top losers, and pharma is also down by over 2%, and that's where you see all the pain point continuing. We will also mark out for you the top movers on the Nifty. It's Asian Paints that soared by 2%, HDFC Life, Trent, BEL and M&M as among those key stocks that are higher. Whereas on the lower end, you do see stocks like Wipro, Sun Pharma, IndusInd Bank, Jio and Tech Mahindra as among those top laggards in trade right now. Let me also look at the stocks within the Nifty 500 basket that are making a mark. Look at names like MNB Engineering, day one off move, and you can see a 5% higher move on this one. Hemisphere Properties is higher. Kirloskar Oil from last couple of sessions has been in momentum. You can also look at names like even Godfrey Phillips, that continues to soar higher after those earnings announcements and the bonus announcement that's come in. You also have Transrail Lighting, another one that post Q1 has seen a sharp jump today. There was a 13% jump in Q1 profit of the company, Transrail Lighting. It has also logged the best day since its listing as well in trade today, with that sharp 14.5% rally that we have seen. Godfrey Phillips that we were marking out for you, the shares have surged 16% in 2 days and also have hit a 52-week high level as well. Remember, like I pointed out, this is after the company's posted strong Q1 earnings and announced a bonus issue as well. Now, what the company has reported is that 56% year-on-year rise in its consolidated net profit was seen. Even the revenues from operations had jumped to 1,813 crores from 1,358 crore rupees that was seen in the year ago period as well. And of course, after the bonus issue announcement, we have seen the stock prices continue to rally as well. Waaree Energies is also another one that's also on the move within the Nifty 500 basket. Sri Lotus Developers, another new debut stock today. You can see a 30% rally that we have seen. Now remember, even when we were discussing yesterday, it was Pawan who shared with us that the large expectation is out of the 3 new debuts today of NSTL, Sri Lotus and MNB, it was expected that Sri Lotus will outperform in the listing gain with about a 20% rally. And again today on the day one, you have seen a 30% move on Sri Lotus Developers, and that's what is kicking the stock higher in trade as well. Let me now quickly look at what's also taking place in the F&O space. IFL Finance, Tube Investments, Union Bank, Asian Paints remain as the top movers there, whereas Bosch, PG, Electroplast and Consumer and Godrej Consumer Products, that continues to drag in the trade as well. What's also moving in the Nifty Next 50 list is Swiggy, Indigo, that's on the higher side. You can also look at some names like Vedanta, Shree Cement from the commodities basket that are also on a rallying trade. But there you have it, the closing session, 80 points lower on the Nifty, 24,569. We'll leave you at that, viewers, but do stay tuned on to Business Today Television as we continue to get you the coverage on the markets and even beyond the market hours from the world of business and finance.
Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
India's economic architects, together on one powerful stage. From Nitin Gadkari to Arvind Panagaria and Montek Singh Ahluwalia, visionaries who are shaping India's future. All debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook, finance, roads, reforms, disinvestment, nothing is off the table. The inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi.